Welcome to the Franchise Freedom Podcast. I'm your host, Giuseppe Grammatico, your franchise guide. And today we have a very special guest. I was actually on Ryan's show a couple weeks ago. We have Ryan Sterling. Ryan is from Future U Wealth. It is his goal to ensure that all of his members and families achieve their own version of financial peace and independence by bringing mindfulness and intention to the wealth management process. And Ryan wanted to welcome you to the show.
Yeah, it's good to be on.
So really excited. Two finance guys. I know that was the previous industry I was in, and we were talking about stuff that seems to be way over my head, such as cryptocurrencies and things like that. So we may touch on that today because I'm sure people are essentially in the same boat as me. But just if you wouldn't mind, we have a lot of people listening in that are first-time business owners.
Mm-hmm.
You know, we talk about the various vehicles, the various investments you can make. And if you could just tell us a little bit about what you do, how you got into it, and what that journey has looked like.
Yeah, absolutely. So I've been a financial advisor going on close to 20 years. The bulk of my time in the business has been spent working at some of the larger firms in the industry. Actually, you and I are both alumni of Alliance Bernstein. So I worked at Bernstein for a number of years. I worked at Goldman Sachs in their private client group. And most recently, I was at a large investment management firm called Capital Group, working with the firm's high net worth employees. I love the wealth management industry. I love working with my clients. It's a perfect mix of my skill set in that I have an analytical side of my brain. So I like numbers, I like investing. But at the same time, I like the fact that my clients are individuals. That was something that was really important to me, as opposed to, my clients being institutions or corporations. Right. It's always fun when I can go from one conversation with a client where we're talking about some sort of complex investment strategy, and then the next minute I'm talking to somebody and they want to talk about their granddaughter in Seattle. So right. I just like the full range of the conversations that I get to have on a day-to-day basis. But, it's funny, I grew up in an entrepreneurial family in that my dad was a serial entrepreneur. And in the 90s, started a business that he ended up franchising the concept. Mm-hmm. And it grew fairly quickly in the 90s. And the company is still around today. It's a European style bakery, primarily in the Midwest. It's called Breadsmith. And again, still franchised. They're still accepting franchisees. He's not necessarily involved in the day-to-day anymore, but it's interesting because growing up with my father being an entrepreneur, that was always something that was in the back of my mind. Mm-hmm. And I remember something that he said to me, in that there are suppliers of labor and owners of capital. And that's something that has stayed with me for so long. And, while I was working inside of the big companies, there's a certain entrepreneurial element of it, in the sense that, I ran my own practice, but you're still working for somebody, right? And while I was making good money, and while it was nice to have the safety and security of a big firm behind me, and have all, the health insurance, all that good stuff, I felt like I was really missing out on something. And I felt like I wasn't doing myself a service. So about a year and a half ago, I left the confines of a big corporation and started my own firm, Future U Wealth. So today, running my own independent wealth advisory practice. My wife is also in the business as well. She left her job to join me, and it's a blast. I mean, it's certainly challenges. It certainly, gave up again the comforts of a paycheck and some of the other corporate perks. But I wouldn't change it for the world. And just the power of owning your own firm and owning the asset is something that there's just a tremendous amount of value in that.
So we must have very similar stories, because I felt like the same. My family was in the restaurant business, left there. That was a tough business with the hours and working on holidays, and did the corporate route, MBA, worked for the Bernsteins, the JP Morgans of the world, and learned a lot. I don't regret any move. You learn, you build from every experience. But I felt like I was missing out. I was miserable. It was just, I felt like something was missing. I was constantly stuck. I knew I had to work the same hours for the same, same person, same cubicle. So I'm glad you brought that up, because I think many people are embarrassed or not comfortable talking about it. So it's good to know that other people have experienced it, and what they had to do. I guess it's more of a mindset thing, right? It's not that you or I are special, right? We're all built the same, but we just, our motivations were strong enough to make that switch. Because yes, leaving a stable job, 401k and health insurance, that's rough. That's a big shift. So I always jokingly say, I like to make fun of myself, and my hair was black before then. So definitely earn my stripes and my whites. So white hair. So, but it's not for everyone, but I always like to empower people to look into it, at least, that not just online, speak with someone and learn about their journey, because everyone's journey has been different. So
yeah, and it's funny, so as much as my father used to say, there's owners of capital and there's suppliers of labor. And again, that stuck with me because I was a supplier of labor for the longest time. At the same time, he used to tell me, hey, I'm working 80, 90-hour weeks running my own company. I'm not making what they're making at Wall Street. So he used to tell me, go to Wall Street, because if you're going to work, 70, 80, 90 hours a week, you might as well get paid what those guys get paid. So it's interesting kind of hearing, my father talk out of both sides of his mouth. And I think he was right about both of them, and that I'm really happy that I worked for as long as I did and had that experience. But I'll tell you, now working and running a practice on my own, again, I took a pay cut. I don't have the same corporate perks. But I wouldn't trade it to go back into a big firm. I mean, you couldn't pay me enough to go back working for someone else now that I have the independence. Yeah,
no, it's quality of life. You need to enjoy it, right? I mean, you can decide who you work with. I had someone, I was talking to someone, and they said, well, I was making 150 at my job. I need to make 150,000 in the business. And I said, well, there's no cap in any business, but if you're just looking to walk in your first year, match that 150 and move on, I go, well, there's an investment, there's a learning curve, there's training. You need to get the name, out there in the market, establish yourself. But more importantly, you have to look down the road. You have to look at which is going to make you happier. I've never missed my sons or both my kids. My daughter was doing dance, never missed a recital or soccer game. But more importantly, you look at the tax benefits. Sometimes you don't have to make as much as you made, and people don't realize that. They look at, they want to compare apples to apples. And I said, if I was making 150,000 as a business owner, you look at all the other perks of owning a business, and guess what? If I'm taking all in, my compensation is 150, or well, just for simplicity, my earnings are 150 all in. Now I'm looking at going to sell that business eventually, 2, 3, 4, 5, whatever, depending on the industry and the volume in business. I'm looking at a huge multiple, right, on that. So people don't realize that, and well, you can sell your business, and you can sell it for a hell of a lot more than what you invested in the business. And then people start to, I guess, forget, or maybe they don't realize. So, we do a lot of education, as I'm sure you do. So,
it's you make such a good point there. And I mean, the fact that you own the asset is so powerful. You can work in the confines and have the comforts of a corporation behind you. But on your 55th birthday, they could throw you a birthday party, and the next day they can show you the door and give you a couple months severance, and that's it. Where owning the business and owning the asset, I mean, I've been in business a year and a half, and I had someone approach me and made a very loose offer for my business. Wow. And the number they threw out there was, I mean, there's no way, with the amount of money that I put in to start my business, there's no way I could have had a rate of return. Nothing could replace that rate of return I got based on that number. So I think people, they don't think about that, right? That you're building an asset, and you own the asset, and there's a tremendous amount of value there.
Yes, there is. And just that, the value, the tax benefits, it is. And at the end of the day, if your intention is not just to sell it, you're building a legacy for your family. So future wealth for the future or the kids or your future kids. So
that's right.
So, we talk about, a lot of people talk about, we talk about investments, and investments are not just along the lines, as we were talking about earlier, stocks, bonds. There's businesses. There's so many different avenues. And, you hear the term financial independence. Talk to me a little bit about, financial independence. What, if I were to ask you, or a client were to ask you, what's financial independence? We'll start there because there's a couple of things I want to ask you, but what's your definition of financial independence?
Yeah, financial independence is basically having enough revenue or income streams where you are completely independent from relying on anyone else or anything else to sustain your day-to-day lifestyle. So you're not dependent on a paycheck. You're not dependent on any sort of government subsidy. You're not dependent on a spouse or a family member. That you have enough income sources, whether it's from a business, real estate, your stock portfolio, whatever it may be, you have enough income sources that you are not dependent on anyone else to sustain your lifestyle.
I like that. That's great. So now the next question, and I'm sure you know the next question: how do we achieve financial independence? What is, there is, good and bad. The internet's good and it's bad. I think there's too much information in that. When I say too much information, it becomes overwhelming. People become paralyzed looking at the info, or they absorb it all and then they go, okay, what the heck do I do with it? I need to invest in stocks. I need to have a business. I need to own Bitcoin. I need to own commodities because I read about it, or in school we learned about gold. Where the heck do people start? Do they have to invest in everything in order to achieve financial independence?
No, actually, I think diversification is really important, but at the same time, I think you have to focus on what you know. So, for example, I'm a huge proponent of the stock markets. I'm comfortable in the stock market. I started my career in the technology bubble bursting, and then with 9/11 and that recession, I then went through the financial crisis. I've now gone through this health crisis. So, I mean, in my 20-year career, I've been through 3 once in a lifetime events. So I'm very comfortable with going through peak to trough losses in the stock market of 30+%, and being able to persevere and fight through that. So for me, the stock market has been an incredible source for building wealth. And I have a number of clients that have built up stock portfolios to the point that there's something called a 4% rule, in that you can comfortably spend 4% of your liquid asset base. So just quick, easy numbers here. At $1 million portfolio, you can sustain a $40,000 withdrawal from that portfolio with a high degree of confidence that you will maintain your value over time. So for me, I'm very comfortable with the stock market. For other people, I know there are a lot of real estate families where they're very comfortable with real estate and they own a number of different properties and they're very comfortable with the income stream from those properties. Other people, it's a business where there's a family business or there's multiple family businesses and there's a cash cow associated with it. And at some point in time, and I think when you're talking about a business, I think this is an important distinction. It's, do you work in your business or do you work on your business? And ultimately, from a financial independence standpoint, you want to get to the point where the business doesn't need you anymore. And that you have the right people around you and the right support and the right infrastructure where you can step away for 2 months and the business is still moving and you and your family are collecting the dividend. So I think, when I think of financial independence, I think those are the 3 ones that I am the most comfortable with. And again, that's stocks, real estate, and owning a business. In terms of, and again, we were talking about, Bitcoin, NFTs, some of these other, these
we didn't learn that
stocks.
in finance class.
Yeah, exactly. There's a reason for it. And, it's, I understand them, and I think they're very interesting. That said, the fact that Bitcoin doesn't produce any sort of cash flow. Bitcoin doesn't produce anything, right? It was created by someone 13 years ago. We don't know who the identity of this person is.
Oh, really?
They created this digital dot on the screen. And 1 dot right now is the same price as a brand new BMW. It's the same price as a franchise you could probably buy. Wow. But this dot on the screen again, it doesn't produce anything. It doesn't do anything. It doesn't generate any sort of cash flow. The value of one Bitcoin is all contingent on, is someone willing to pay a higher price in the future than what you paid for it?
Right.
Some of these NFTs, these non-fungible tokens, is same thing, right? The value is all based on, does someone else think it's the same value or more valuable than you think it is? Right. So when you're talking about financial independence, those are speculative investments. Those are not the way to achieve financial independence. Day trading is not a way to achieve financial independence, right? If you want to be a successful day trader, which most people are not, number one, if you are a really successful day trader, I tell this to people all the time, you should start your own fund. And you should charge a 2 or 20. You should start create a company around it, right? And you should do it with other people's money and charge 2 and 20 if you're really that talented at it. But I think when you're talking about the stock market, I mean, I think having a diversified portfolio, again, I'm an advocate and I tend to overweight stocks in client portfolios. I think there's definitely a path to achieve financial independence through stocks.
Mm-hmm. Yeah, I cannot agree more. I mean, we go back in history. It's a combination, if you own a business, obviously you're going to have some type of retirement plan, which, by the way, you can put a heck of a lot more away than a traditional 401k.
Very true.
You can match it. You can do quite a bit. So definitely a lot of options, and you don't need to stick it in the mutual funds, that the 10 mutual funds your company is giving you. You can invest in, I guess, can you invest in Bitcoin in your retirement? I don't know. Is that?
You technically can. And it's funny, I have some clients who are business owners, and, a lot of them, they have SEP IRAs. A lot of them do. Yep. And I mean, you can put $57,000 away in a SEP IRA where you can only put $19,500 in a 401k. And you make a really good point in that you're limited to the investment options they give you. And there are usually a lot of embedded fees inside of 401k plans. This is not to say 401k plans are bad. But it's not uncommon that I come across 401k plans where like there could be a 2% fee baked into that. So you can open a SEP IRA and, so for example, I charge 0.8% management fee for accounts under $1 million. So, I think about some of these clients who have between 100,000 and $1 million, and there's a SEP IRA associated with it. It's significantly less expensive from a management standpoint than a 401k. You have an advisor attached to it. Right. And again, you put away a lot more money.
Yeah, that's true. I mean, and with the retirement account, you're paying 2% in fees. Plus, if they're in mutual funds, which most of them are going to be, you're looking at anywhere from 0.5 point to whatever.
Yep. No doubt.
As high as it goes. I forget what the maxes are, but
that's right.
Yeah, that's interesting. And by the way, the 4% you had mentioned, just read about that. It's pretty interesting, and I forget the website. Someone had referred a website over, and I was just reading about that to sustain it. Given the average market returns of, I think they were using 7 or 8%. I think it was the average return. It's probably higher now, but I thought that was pretty interesting. So, entrepreneurship, obviously, everything is customizable. So to your point, I follow the Buffetts of the world and some of these larger investors, and they say the same thing: invest what you know and you're comfortable with. Just because you can yield a higher return in a certain area, if you're not comfortable, if you're not going to follow it, you're kind of setting yourself up. Kind of like I'm buying a business because I know my neighbor is doing really well in a certain franchise, so I buy the same one. I'm setting myself up for failure because it may not be a good fit for me. It may not meet the risk tolerance. I may be really conservative, and he or she's really risky. So everything is customized based off the person's goals, the family, what they're looking to do with the business. We can't just assume, like when someone comes to me and is looking at a franchise, what's the hot franchise? I say, I don't care. What's the right one for you? So. So where does entrepreneurship fall in the mix? So if someone does come to you, how are you able to assist them, or what are your thoughts? I know we kind of talked about entrepreneurship, but if they're talking about investing, but setting aside money to, for a business, for a franchise or a startup, what are your thoughts there as far as, is there, I don't know, some type of recommendations you give to people?
Yeah, it's a great question. So, Yeah, so I do have a lot of clients. So I mean, I can think of a number of clients I have who are in traditional industries. I mean, lawyers, investment
Mhm.
bankers, you name it. I mean, people who are high earners, they're doing really well in their careers. But they might fit the fact pattern of somewhere in the 40s or early 50s and saying like, I can't do this forever,
Right.
and I need kind of a what's my phase two going to look like, and I want to run some sort of business. So I love it when people come to me with those types of questions and those goals, because again, I'm such a fierce proponent of entrepreneurship.
Mhm.
But what I tell people though, and this is what I did for myself, so part of it is just I was my first case study with respect of making the transition from corporate world to being a business owner, and that is this: number one, when you start getting that itch, it doesn't need to be all or nothing right away.
Mhm.
Give yourself at least 2 years. And it's funny. I tell this story when I got the urge to start my own company. I said, okay, I really want to do this. I gave myself over 2 years, and part of that was my wife and I sitting down and saying, uh, okay, here's what we're making right now. We have to prepare for making significantly less than what we're making right now.
Mhm.
How about we start living that lifestyle today?
Right.
And with all of the money that we're earning, use that as savings.
Mhm.
So a real funny story. So we agreed to it. We were on the same page. And there was one night where I was making dinner and Shark Tank was on in the background, and Mark Cuban was talking to some entrepreneur, and they had somewhat of expensive taste. And Mark Cuban said something to the effect of, if you want to be an entrepreneur, you have to start eating rice and beans 2 years before you start your business. And I was literally making rice and beans when when that happened. So I was like, all right, we're on
You
the
got
same
that
page as
part. You
Mark
and Mark
Cuban.
are on the same page.
Exactly. Check. Okay, we're doing this right.
Right.
So I think number one, it's give yourself 2 years or so. Commit to it, but give yourself 2 years
Mhm.
and start to think about, okay, what adjustments can we make to our lifestyle? And part of it comes down to choices, right? And this goes back to financial independence, and part of it is looking at it through a lens of mindfulness and intention, and saying, what does my best, most meaningful life look like?
Right.
And so, I know one person in particular who's, and I hate to pick on attorneys, so forgive me for all those attorneys out there, but so I know someone who works at one of the big law firms, miserable, absolutely miserable at their jobs. His job, hates it, and
Mhm.
every time he sees me, he's like, "I would love to do what you do. I would love to own my own business." And this is true story. This has literally happened. He's telling me this in the elevator, and then 2 minutes later, he's showing me his brand new BMW, and he's telling me that he needed to get a new car because he just became a member of this new country club, which he had to because all the partners are members of this country club. And I'm sitting here, I'm like, you bought a $60,000 car. You just got membership to this country club that you're really not that excited to join, but you're doing it because the partners of this law firm that you can't stand
A
are
trap.
partners there. So here's $100,000 that you're paying right now for something that's not serving you. So part of it is looking at, yeah, it might require choices. Like, I'm not signing up for that private club membership.
Mhm.
And if you're not willing to do that, maybe you shouldn't be an entrepreneur, right? So like part of it is looking at like, what can we cut in our life? What's important and what's not important? So again, that's 2 years. And what I would then encourage is when you finally go off on your own, you're ready to make that move.
Mhm.
I would give yourself about 3 years runway to have enough money saved away, something safe and conservative that you can draw on, because you need to give yourself enough time as a business owner, as an entrepreneur, right? It's a big adjustment, and you're not doing yourself a service if you're expecting to get back to where you were in 6 months, because that's probably not going to happen.
Yeah, some really good advice. And to your point, talking about the attorney, it's a trap. You're trying to be at the same status level, impress everyone, and and when it kind of, you start to question their decisions, their financials, their spending habits, because I, I don't know about you, but unless it's a rare BMW, any car is losing value as soon as you drive
Totally.
it off the lot. So investing that same amount, I mean, you can invest with that 60,000, invest in a franchise and in a nice startup. I
That's
mean, you
right.
can get quite a bit for $60,000, and grow it to where you're driving. You can have a different BMW for every day of the week. So,
That's
and I
right.
say that jokingly, but I mean, really, you're not investing. I mean, you're investing in the stock market. You're expecting returns, whether it's you're getting capital gains if you sell. There's dividends. Same thing with the business. There's growth. You can pay yourself, but these things like cars and fancy suits. I always tell everyone, read the what's the book, the Millionaire Next Door, and it's been years, and I'm sure maybe they've updated it then. But I remember reading how the average millionaire next door, which I know of a few of these millionaires next door in some of the towns I've lived in, and they didn't have, they had a luxury car, but it was on the low end. They had one good suit, and it wasn't custom. They bought it at the department store. So usually the guys that were driving flashy cars, and I've worked with a lot of these people, don't have a dime to their name. So I get it. It's it's the lifestyle, but you're not gaining anything. It's just it's a front. It's just for show. And ultimately, you can, with a business, I mean, I would rather not have a brand new car, but being able to spend time and travel with my family. And when people say, yeah, that does sound good, I'd like the same. Well, we can explore business ownership. It's a mind shift change, but start looking at, to your point, your spending habits and putting some money aside, cutting the cable bill in half, cutting, maybe cutting the cable completely, starting to save some money, because you're going to need that buffer. Because even though you think you have enough, it's good to, it's a good practice. It's a good habit. It's good to teach your children if you have children. And you never know how long the business is going to take to scale. So, if you started during the pandemic, I know businesses that grew exponentially, and I knew other businesses that had to shut down because they were brick and mortar. So a lot of great stuff. I encourage everyone to listen to this episode twice, because there is, and we're not done yet. There's a lot of stuff we can unpack here. And then we'll talk about how to get a hold of Ryan directly. One thing we talked about right before the show, lifestyle design. And we kind of touched on this, and, finance is, in my opinion, and it sounds like we're on the same page, or investments, businesses, they're not separate things, right? It's part of your entire lifestyle. So if I kind of look at it as a wheel, you have the spokes of a wheel, and, you're killing it, making tons of money. You may even have a business. You're making money in the market. You're making money in the business. But then when we talk about lifestyle, but your health, you're not exercising. You're eating really poorly. Yeah. You're not spending time with your family. There's a balance aspect to it. So, talk to us a little bit about, what is lifestyle design? How you can help people with that.
Yeah. So what I encourage people to do is design your best day. What does your best day look like? And I'll just use myself as an example. For me to say that was my best day, it's being able to wake up and spend time with my wife. And, we watch the morning news and we have our coffee and we chat. So it's having time in the morning with my wife. Another component to my perfect day is being able to exercise. So having the time to move my body. I'm a runner. I like to go outside and run. I don't care what the weather is. I like to be outside. I like to get my body moving. I like to feel like I accomplished something physically. Number 3 is being able to do something creative. It could be, I consider being on a podcast, or I host my own podcast, or it could be a blog post, or it could be a Facebook ad, it could be, again, something marketing related, just really kind of tug on that creative side of my brain. A fourth part of a perfect day is learning something new, feeling intellectually challenged. That could be related to the industry that I'm in. It could be something that's not, and I just have to have that intellectual curiosity and pick up a book or search out a podcast or whatever it may be. The next one is being able to grow my business. I love being a business owner. I love seeing the business grow, not just for the money, but it's also just to see the value, the impact that I can have on my clients. So anything that I can do to help move my business forward. And then the last one is my community and having some connectivity with friends or family members of mine. Obviously it's hard during COVID, but is it jumping on a Zoom call with somebody? Is it having a phone call? Is it, again, in normal times, maybe going out, grabbing a cup of coffee or whatever it may be. But if I'm able to hit on all of those areas in a given day, that's my perfect day. It
Right.
has nothing to do about the weather. It has nothing to do about winning the lottery one day. It has nothing to do about having to be on vacation
Mhm.
to live this perfect day. And being a business owner, I don't, not every day is a perfect day because life
Mhm.
happens,
Right.
but more often than not, I'm able to structure my days where I am able to live that perfect day more often than not. So with lifestyle design,
Mhm.
I would encourage people out there, design your perfect day. What are you mentioned the spokes? What are
Mhm.
the spokes? What are the components
Right.
that make up your perfect day? And then track how many of those different areas that make up that perfect day, how often are you hitting those
Mhm.
areas on a day-to-day basis?
Great points. Yeah, and it's going again back to the basics on this. What I'll add to that is that you can. I use Google Calendar, so people say, well, how do you track? And if I have everything on there, my tasks, my calls for the day, the podcast we're doing today is on the calendar. You received an invite from me. So what I like to do is, and I need to do a better job is, especially with working out, I'll put that on the calendar, but I'll put the what I call the personal, more important stuff on there. So I'll put the workouts, 7 to 8 a.m. every day block out, so no one can schedule a call with me. Nothing else is going on during that time. I will do. We're not going out as much now. That'll change soon. But one day a week was date night with my wife. Now I would do this ahead of time. Not a single podcast, anything work related was on there. So I always had workout, date night with my wife, something with the family, and those are my rocks. And then everything was built around that. In the past,
Mhm.
I would do everything work related, and then say, okay, I'm up at 5 a.m. I'm getting home at midnight, or I'm exaggerating the
Yeah.
times, but the entire day's is full. Let me try it on the weekend, and then you find on the weekend you got so behind during the week,
Mhm.
you were tired, nothing got done. You just ended up not doing anything that was on the calendar, or at least in my case, for several years. So a coach years ago had taught me that design your week, put all your opinions aside, do what's important. What's
Mhm.
important. It's your health, it's your family, it's all that kind of stuff. Put that on there first, what's truly important, and then you'll make time. As you make time for everything else, you'll figure out, maybe it means shaving the meeting a little bit shorter, being a little bit more concise, and sometimes these meetings at work for an hour could be consolidated in 15 minutes. So just being much more frugal with your time, handling everything, saying no a lot more often, which is
Yeah.
what I do now, which is not easy.
Yep.
It's an area that I'm working on. So great points. And I think that's where it starts, because even, if you have the intention to own a business, to invest, but you're not in the right state of mind, you're tired, you're stressed, you're not eating well, you're going to make poor decisions. Calling Ryan up to make some changes in the investment, or maybe making some poor business decisions. So I think that's crucial, and not enough people talk about it. And it's really simple. You don't need a course on it. It's
Mhm.
really just what we discussed today. But to your point, figure out the spokes of the wheel, right? What's important. A lot of them are going to be the same, but figure out the spokes of the wheel, and work on that. Um, so we're coming towards the end here of the show. So we've been talking about quite a bit. So someone is maybe not sure about entrepreneurship, but they want to get their investments in order. Maybe start there, because we talked about, okay, I'm going to cut expense, but where is my money? It's sitting in a
Mhm.
money market, not collecting anything, sitting under my mattress. Who knows? So what do I do with these investments? Or maybe I have them scattered at 10 different previous employers and their old 401k plans. Where do they start? Do they go to your website? Do they call you directly? What do you recommend to those people?
Yeah, I mean, if you want to talk to me, I would certainly encourage you to speak with a financial professional. You know, at very least, having an introductory conversation with someone, um, it's putting up a mirror to your financial position. I say this all the time. A huge part of engagement my clients have with me is that I am that mirror that they need.
Mhm.
Right? I mean, we're so busy at what we're doing on a daily basis. It sounds like it shouldn't be the case with respect to neglecting our money, but more often than not, people do. So setting up a meeting with a financial advisor, having someone that's serving as your advocate, having someone that's that mirror that they can put up to you so you can see not where you want to be, not where you think you should be, but where you actually are financially,
Right.
and then helping you chart out the path to get to where you want to be. There's a tremendous amount of impact. So to the extent that someone wants to have a free introductory call, go to my website, futureyouwealth.com. That's future and then YOU wealth.com. In the connect section, you can just either book time directly on my calendar, or you can send me a note through the contact form. It goes directly to my email, and then we can set up some time to talk.
And we're going to put all that information in the show notes. Is there any requirements, or should they just reference the show as far as, what they're looking to invest, or just if they have any general questions, can they reach out to you?
Yeah, I would say just reach out. And if it's not a good fit, I'm anyone who's a listener to the show, I'm happy to have a half-hour introductory call. And if it's not a good fit, I'm happy to direct you, move you in the right direction, or just chat with you about your position and provide just a diagnostic in that half hour. And if it is a good fit, then we can continue the conversation.
This is kind of a breath of fresh air. You talk about, I'll kind of leave it off at this. I was in the investment space for many years, and I never forget working at a brokerage house way back when, not to name names, and listening in on a client. I was an intern, I was learning, and client sat down within 5 minutes, 5 or 10, maybe it was 10 minutes. The broker at the time was already firing off some recommendations. And I'm thinking to myself, he didn't ask, it was a husband and wife were sitting with the broker, and the husband spoke, wife didn't say a word. And I could hear the whole conversation because it was kind of an open environment. And he didn't ask about goals. He didn't ask about children. He just asked, how much, what are their goals, very quickly, how much they had to invest. And he was giving recommendations. So it's a breath of fresh air that, we're definitely on the same page. You need to know where someone stands, maybe given their situation, maybe, the stock market is not a good place for them at that point in time, because they are saving that money for, when I should say stocks, because, maybe they are looking to invest in a business and they need to be more liquid. But jumping the gun with recommendations and products is unfortunate. And I'm not saying everyone does that, but it's nice.
It happens more often than not.
Yeah. Yeah, I'm sure, and I'm being nice, by the way. So I have to be nice. So, I don't want to ever be bad about any company. Yeah. And obviously, there's always people with not the best of intentions, but it's unfortunate. But including myself, someone comes to me and they go, "Well, what makes you a great consultant?" I said, "Well, I've been doing it for so many years. I've owned franchise, non-franchise businesses, and if you don't want to work with me, fine. But if someone is calling you recommending a franchise on the first phone call, I would run the opposite way." And they're like, "Funny, that's exactly what happened. I just thought they moved faster." And I said, "Right, because they don't know a thing about you, and they're giving recommendations." So it's unfortunate, and I appreciate, personally, that, someone like yourself, your business exists because, some people in the industry, some companies were getting some bad recognition, a bad rap. And it's nice to know that, this philosophy, this way of doing business still exists. So, Ryan, I really appreciate it. I learned a lot. I think we're going to continue the conversation until I get this Bitcoin figured out. And looking forward to having you get on the show. And once again, I appreciate it.
I had a lot of fun, and I look forward to releasing our episode. So actually, for those of you listening who are interested in hearing us talk a little bit more, Giuseppe was on my podcast, Take the Next Step, where we talk about a lot of the same topics. So if you're digging on this, check out Take the Next Step.
Take the Next Step. Check out the podcast, Franchise Freedom. Appreciate it once again, Ryan, and talk to you soon.
Absolutely. Look forward to it.